Okay, good afternoon, everybody. Welcome to what would have been our Saturday afternoon, 4th of July afternoon session. In this session, we are going to look at general ledgers. Now, this section is very, very important for your assignment. You will see question 1 is basically only ledgers. Question 2 is only ledgers, and half of question 3 is ledgers. So this is very important. If you get this section under the belt, then you should be fine in passing your exam. So what we're going to do is I've got a few slides to just explain how these little T accounts work. And then after we've completed these slides, then we'll do some examples where I will show you what to debit, what to credit, and how these T accounts all get together. So let me share with you guys a PowerPoint slideshow. So there. Right. Okay, so what we are looking at is the following equation. This is almost the biggest thing of accounting. If you understand this, the rest will all fall into place. So it basically says assets equals equity plus liabilities. So what this is actually telling us is your assets that you generate or that you own in your business comes from one of two places. First is equity, and or secondly a liability. So what is that in layman's words? That means any asset that you've either bought from funds that you've generated yourself, or if you don't have funds that you've generated yourself, then that asset came from incurring a liability. So let's look at the quick definition of these. So the definition of an asset is a future inflow of economic benefits. Okay, so what does that actually mean? Future inflow of economic benefits. That basically means anything that you as the shareholder of this business can put over into or convert into rands or funds and take that for yourself. So we'll look at a few examples of that later on. Then liabilities is again an outflow of future economic benefits. So that means in the future, you will have to pay someone money. And then equity is the balancing figure between those two. Equity is basically your income less all of your expenses. So here's some of the examples for those three. Under assets, we have fixed assets. So why would a fixed asset be an asset? Because if you buy a motor vehicle, if you buy it today, it will still have some value tomorrow and next year and the year after that. So because it will have future value, in a year from now, you can sell that car. That car, when you sell the car, the money gets paid into your bank account, and you as the shareholder, if you stop doing business now, can then take that money for yourself. So that's why we see a fixed asset as an asset, because in future you can sell those assets, and the moment you sell it, it becomes cash, and cash can be withdrawn by yourself. Same then, we've got a positive bank account. So if I've got a positive bank account balance, that will be an asset. Why an asset? Because in future, I as the shareholder can go and withdraw the funds in that bank. Then we have debtors. At the moment you write fees, your client owes you money. Because he owes you money, he will in future pay that money into your bank, and you as the shareholder can withdraw that funds, and it will be an asset for you. And then the same with a rental deposit. So we will use the example of rent paid and rent deposit a little later on, to explain the difference between assets and expenses, but a rental deposit you pay to your landlord, and it stays with your landlord, and in 2 years or however long time, when your lease expires, then the landlord will pay that money back into your bank account. And the moment it's back in your bank, you can then withdraw the funds and use it for yourself. So there you can see. So the common factor between all of these assets are, in future, you can either, they are cash or they can be converted into cash, and you can in future withdraw those funds. Then let's skip over to liabilities. There we have installment sale agreements. So with installment sales, that means you have to pay off your cars. So if I buy a car and I finance it through Westbank or MFC or one of those guys, the moment it means that in future I will have to pay monies over to them. I will lose economic benefits. The same with advocates and sheriffs. The moment they send you accounts, if you don't pay them at that moment, in future you will still have to pay them. So we will show them as liabilities. If you've got business credit cards and those are overdrawn, then that will also be a liability, because in future your bank balance there will decrease having to settle your credit cards. And then also VAT and PAYE. As you accrue your VAT, you know that from our first lecture, you have to pay that VAT over to SARS at a certain point. Well, on the last business day of the third month, and your PAYE has to be paid over by the 7th of the month after the salary is paid. So what it comes down to is at month end, you will have to in future pay that monies over to SARS, and therefore your VAT and PAYE is also a liability. So the question you ask yourself any time where you have a transaction where you're going to have to pay someone in future, then you classify that as a liability. Then in the middle we find income and expenses. So income is basically anytime anytime an asset increases, that will give you income. And every time a liability increases, that will be an expense. We'll get to the T accounts later. Okay, so in the assignment, they request that you draft little T accounts. So a T account looks like a T. You're going to put a name on top there. Now, a few notes on that from previously marking the assignments. The general rule about that is, whatever the name is that you put there, that name must just give the reader of these financial statements a clear indication of what is going on. But for purposes of our assignment, you guys must be very specific when you write either a client's name, because a lot of you guys will just write business debtor. Now, there's no points for that. You've got to specifically say it's client A, or it's Leclerc, or who the person is whose ledger it is. And the same with trust. You can't just have one trust creditor for everyone. You need to be very clear on who the client is whose ledger it is. And then also you've got to be clear on whether an account relates to trust or to business. A lot of you guys will just write the name client A, but then if you don't specify whether it's his business ledger or his trust ledger, no marks can be allocated. So the name is very important, that you write a complete and comprehensive name for the T account. Okay, then the debit side, so the left-hand side, is called the debit side. So from now on, when something's on the left, I'm going to refer to that as the debit side. And other transactions will be on the credit side. So that is the right-hand side of a T account. Okay, so now we've taken that equation where we say assets equals equity plus liabilities. And I've drafted them into a little T account format. And now we start to look at on which side do these T accounts increase and where do they decrease. So the easy way to remember it, if you can just remember that an asset increases on the debit side and it decreases on the credit side. Then the moment we go over the equal sign, the plus and the minus will switch around. So equity will increase on the credit side and equity will decrease on the debit side. And the liability will also decrease on the debit side and increase on the credit side. So then we've got the principle that we call the double-sided accounting principle. So basically what it comes down to, it's for each transaction, any transaction in the world, there's two legs. There's always a debit leg and there's a credit leg. There's always two things that happen. So let's take a simple example like a vehicle purchase. And let's look at the two legs. What has happened there? So if you go to the shop and you buy a vehicle, and let's say for this example, you buy that vehicle on finance. What is the two things that happen the moment you walk out of that shop? The one thing is you now have a new car. And the second thing that happens is you have a new liability because you need to settle that car in future. So let's, for argument's say, the value of that vehicle is 100,000 Rand. In my financial records, I will then go and write a transaction on the debit side because a vehicle is an asset, as I explained earlier, because we will use it over a long period of time, and we'll be able to sell that vehicle in a year or 2 or 3 at a certain value. So your vehicle entry will be on the debit side because there's an asset that increased. And the other thing that I said that happens is the moment you walk out there, you have a liability. In other words, your firm's liabilities have also increased by 100,000 Rand because you need to pay off that vehicle in future. So do you see there's 100,000 Rand on the debit side and 100,000 Rand on the credit side. Okay, so it's not to say that one transaction or one leg has to be here and the other leg either there or there. You'll see now you can have your debit and your credit leg under the liability section, or you can have your debit and your credit leg under the asset section, as long as for every transaction you have a debit and a credit leg. So in that example, let's say we did get a vehicle of 100,000 Rand. Now we owe Westbank that 100,000 Rand. If Westbank would then come to us and say we were the winner of a lucky sweepstakes draw and we won the prize, that we no longer have to pay our vehicle off, how would that affect this equation of ours? Let's look at the asset side. Do we still have the vehicle? Yes. So my assets have increased and I will still have or keep my debit entry there for 100,000 Rand. Do I still have the liability of 100,000 Rand? And the answer is no. So that 100,000 Rand on that side would now fall away. But now my equation is unbalanced because I've got 100 on the debit side there. I need either there on the credit side of equity or on the credit side of liabilities. So in this case, the moment the bank comes to us and say we've now won that, we don't have to pay that liability off. Now I will move that 100,000 Rand out of liabilities and put that under equity as a positive, because now I, as the shareholder, have actually gained in value because I have a car and I don't owe any money for it. So my value is now 100,000 Rand. Okay, let's look at the next one. If we write a fee, so if we write a fee to a client, does that automatically go into my bank? And the answer is no. I first have to invoice the client. If I'm lucky, they'll settle the invoice within a few days. If I'm unlucky, it will take a few months. So let's look at the two things that happen the moment I invoice my client. The first thing is he owes me the money. And the second thing is I have generated income. My value as the shareholder has increased. So the moment I know someone is going to pay me money in future, that means I have to create a T account for that client, and I will write, let's say it's a fee of 10,000 Rand, then I've got to increase my assets by 10,000 Rand. Why do I say that? Because in future, that client will pay the money into my bank account, and I can then withdraw that bank account. That's why I say I've generated an asset. So we know 10,000 Rand goes there. Where do we go with the credit? Now, the way that I always explain that to the guys in these classes is as follows. If someone pays money into my bank, if I have to pay it back to them, the credit leg is a liability. If I don't have to pay it back to them, the credited leg will be equity. So in this case, if I generate a fee and I show that as an asset under the client's name, when he pays that, will I have to pay that money back to him? And the answer is no. So then I'm not going to write the credit leg under liabilities. I will write it under equity. So I'll create a new fee, little T account called fee income, and I will write that the credit leg in there. Because I, as the shareholder, have now generated equity for myself. Because I've got a debtor, the debtor will settle his account in future, and once he's settled, then I will be able to, once he's settled, I'll be able to withdraw those funds and in that manner increase my equity. Okay, then let's look at rent and rental deposit. So if your landlord, let's say on the first invoice your landlord sends you, there's two transactions on that first invoice. He's asking you for a rental deposit and he's asking you for your first month's rent. So what happens? The moment that I receive that invoice, I know that I have now incurred a liability because in future I will have to pay these funds to the landlord. So I will write, so let's say it's 5,000 and 5,000, so I will increase my liabilities by 10,000. Now let's look at the rent portion. When I pay my rent to that landlord, will he in future pay that back to me? And the answer is no. Once I've paid that to him, that money is gone. So the debit leg, so this was the credit leg, the debit leg will then be negative equity because I'm paying it out and I will never see the money again. And then let's look at the deposit. So the deposit's also included in that 10,000 Rand that we incurred as a liability. Will I in future receive the deposit monies back? And highly likely, yes, I will receive it back in future. So I haven't lost equity because of that transaction, because the debit leg will now increase assets. Why do I say that? Because in future, the landlord will pay those funds back into my bank account. And the moment he pays it back, I can withdraw it as the shareholder, and that's why it's an asset. So rent expense, the moment you pay that or incur that liability, because I'm not going to get the rent money back, I lose equity. But for the deposit, because I'm going to get it back, I've generated an asset. So 10,000 Rand, 5,000 Rand under rent expense, and 5,000 Rand under rent deposit. Okay, so you might need to listen to this section once or twice until you get it under the knee. But you'll see as soon as we get to the examples, it will make a lot more sense. Okay, so here's the part that I said. If someone pays money into your bank, so there's my bank T account, and that's an asset. So client A pays money into my bank, 10,000 Rand. If he says, so if it's for fees, then I can keep it. So therefore, I've generated fees, which is equity, and my credit entry will be 10,000 Rand there. But what happens if I have to repay the monies in future? So let's say someone borrows me funds for my business. So John, my bank will increase with 15,000 because he physically pays the money in. But I will then have to generate a creditor for John to show that in future I will have to pay him back. Okay, so throughout the questions, I'm always going to ask, will we have to pay the money back? If yes, then liabilities. If no, equity. Okay, so now I'm going to just go back to this equation here. So this is now for a typical business set. So we've got assets equals equity plus liabilities. So the question that I ask on the next slide is, how does this equation change when we move over into the trust accounting records? And the answer is this section here, the equity section, falls away. I can never have equity in my trust account. I'm never allowed to have income or expenses paid from my trust. So for trust, it simply goes assets equals liabilities. The equity section falls away completely. So for trust, my equation will look as follows. So let's just see, if a client pays money into my trust bank account, which is an asset, will increase, and that money is not mine, that is on behalf of the client. So immediately my contra account will be a liability with the client's name, and the liability will increase because in future I will have to pay those funds out either to the client or on his behalf. Okay, then when analyzing, so obviously now when we do these T accounts, after you've done them, you need to have a look at your T accounts. I always say your T accounts must speak to you, and you've got to assess whether what you've actually written down there makes sense. So assuming this is your T account like that, if a T account has a closing balance on the debit side, then it means that T account is either an asset or it is an expense. So if a T account has a closing balance on the debit side, you need to ask yourself, will I in future receive benefits because of this? If yes, then I classify that T account as an asset. If no, then I classify the T account as an expense. And then on the credit side, if I have any T account that's got a balance on the credit side, it's one of two things. It's either a liability if I have to pay the money back, or if I don't have to pay the money back, it's my income. So this is quite an important little T account or little formula to analyze after we've drafted the T accounts. Okay, so what we're going to do is for every transaction, as we go through the example, you remember in the first section I explained there that for each, well, we need to have two separate sets of accounting records. We need to have one set for business and we need to have one set for trust. So in practice, what I'm going to do is I'm going to have an Excel sheet, one for trust and one for business, on which I'm going to explain these transactions for you. So on your side, if I was you, I would work along through the questions with me. Oh, I'll explain that part when we get there. Basically, my first question is, on what page am I working? Am I working on my trust page or on my business page? Then secondly, we need to decide, is there a flow of cash? If there is a flow of cash, what does a flow of cash mean? That basically means, would this transaction reflect in my bank statement? If the answer is yes, then we have to write that into our cash book. If the answer is no, in other words, there's a transaction, but there's no flow of cash, then we have to do a journal. And what account am I going to credit? Okay, then I just want to give you guys an example. What does a complete T account look like? Now, this is very important for purposes of the assignment. If you read through the assignment, they say there that as a minimum, you have to write the date, you have to write the name of the contra account as your description, and you have to write the correct amount in. Now, guys, the markers are very strict on this because many times you'll get the amount correct and the date, but then you don't actually know where to post the transaction, what the other leg of the transaction is. So we are looking for your other leg of the transaction as the description there. In practice, we'll put transaction numbers on each transaction that we put in, but for purposes of your assignment, they don't require that. Only the date, the name of the contra account that you are posting it to, and the amount. And then at the end of every month, we have to close off our ledgers. So basically, if I look only at my transactions, I've got 50,000 Rand that came into my business bank account. And from there, I paid out 2,000 Rand. Then what you've got to do is you've got to look at which side is smaller up to that point. So 50,000 is larger than 2,000. So then I'm going to write my balance carried forward. That's actually the wrong way around. That should be balance carried forward of 48,000 Rand. And after the equal sign. So now if I enter that transaction in, my debits and my credits are the same. And now I'm carrying that balance forward into my following month. So that should actually be balance brought forward from the previous month. Okay, but for purposes of your assignment, they're not asking you to close off the accounts. They're merely asking you to enter the transactions with a date, a contra account, and an amount. Okay, so now let's move into some examples. So what I'm going to do is I'm going to share an Excel file with you guys. Right. So here we've got some transactions. So we're going to do each of these transactions. And then what I've done is I've opened a sheet there, which is my trust accounting records, and one here that is my business accounting records. Okay, so I'm going to do the first one, and then you guys will understand how the whole thing starts to get together. Okay, so let's start. First, we have some business questions. On the 1st of June 2020, you deposit 100,000 Rand into the business account as a loan. So that's that line there. Okay, so now let's think. If we go back to those slides, what was our chain of thoughts or our answers that we need to have? So the first one is this a trust transaction or a business transaction? So the moment it's from myself and I'm borrowing the funds to the business, that will be a business transaction. So that means I know that I have to work on this sheet. So if I was you at this point, I would take an A4 page and draft something similar to this. The reason why I say that is when you do these classes, it's very easy to understand the transactions when I explain it to you. But the moment you are going to sit at home and try and do these transactions on your own, you will very possibly get confused. So what I'm trying to and do is I want you to think as we go through the questions and as to how you would answer it. And then once you've done that, you'll see immediately you'll be unsure on which account, which T account to use and all of these type of things. So the moment you see that I want you, or you have that confusion, that's a good thing, because now you are thinking about it, and once I explain where it should go, that will then help you to read the transaction and do it correctly. So if we go back to our data, we are saying that on the 1st of June, we are on the 1st of June, we are going to deposit 100,000 Rand into the business account. So we've decided to go into the business account. So the next question is there a flow of cash? If our answer is yes, the transaction will go into this T account. If the answer is no, we are going to do a journal entry for that. So we're going to start off by entering the date. That was the 1st of June 2020. I'm going to leave the description out for the moment. The amount is 100,000 Rand. So now I've got a debit of 100,000 Rand, and I now need to allocate this debit to a credit. So for one of my other subledgers here, I need to have a credit. So what will I call that T account? What happens? The one thing that happened is the business account is 100,000 Rand more. The second thing that happens is the business owes me as the shareholder 100,000 Rand more. So I'm going to open this T account and call it shareholder loan and enter 100,000 Rand on the credit side. Oops, that's a million. 100,000 Rand on the credit side on the 1st of June 2020. And then what the question requires me is to write in the description the name of the contra account. So where did I post this to? I posted this to shareholder. And on the credit side, what is the credit side? Where this 100,000, what is the debit side? The debit side is my business cash book. That's how we completely or account for a transaction in completeness. Okay. Yeah, let's look at the next one. The next one says on the 5th of June, you purchase a PC of 30,000 Rand inclusive of VAT. So first question, will that be a business or a trust transaction? Definitely business. I just quickly want to switch these two accounts around because I want my VAT control to be the top one, because we're going to be using that a lot more than what we are going to be using shareholders loan. So we'll make our VAT control the top account there. Right. Okay, so now we've got to ask ourselves, is there a flow of cash? Now, assuming that we use this 100,000 Rand in our bank and we purchase this swiping the company card, okay? We're not buying this PC on account. So is there then a flow of cash for that? And the answer is yes. So my transaction will be in my business cash book. We're not going to do a journal entry. That transaction was on the 5th of June. What amount will my business cash book decrease by? By 30,000 Rand or 30,000 Rand less the VAT portion. If you walk into Spar or into Incredible Connection and you go and you buy a PC there, they don't tell you to pay the exclusive of VAT amount. You have to pay the inclusive of VAT amount and then go and claim your VAT back from SARS. So the full inclusive amount will always go out of my bank account. So now we know we have a credit, so we need to have another T account with a debit. What did I do with those funds? The answer is I purchased a PC. So now you've got to ask yourself, so we're going to say computer equipment. And what will I classify this computer equipment? Will I be able to use this for longer than a year? Will I receive future value from this PC? And the answer is yes. So computer equipment will be an asset. Okay, now we've got to work out how much are we going to allocate there and how much are we going to allocate to the VAT control account. Now, I'm going to write the formula in so that you guys can see how we do that. Now, you'll remember in the previous lecture, I wrote a little formula of how to get the VAT or the inclusive or the exclusive amount. So I know them by heart now, so you guys can just go back to that table if you're battling with this. So that is the inclusive amount, and it's on the credit side. So that means my other two entries must be on the debit side. So the answer is, if I have the inclusive amount, it's times 15 divided by 115. So that is the amount of VAT that I can claim back from SARS. See, it's on the debit side, so at this point it means it's classified as an asset. So SARS will in future pay that money back to me. That was on the 5th of the 6th. And now on the computer equipment, I will allocate the balance. So to calculate the balance, we'll say it's that 30,000 divided by 1.15. So let's just check if I add those two together. Yes, there you can see I get around 30,000. So my debits equal my credits. And now I have to go and enter the descriptions. So what was my contra accounts? I'm going to say computer equipment plus VAT. Those are the two accounts that I used. And in my VAT, simply BCB and my inputs, because that is where the debit for the credit entry for these two debits. Okay, now let's go on to transaction number 3. So on the 15th of June, we find offices and we pay the following to the landlord. First month's rent of 12,000 Rand and our rental deposit of 12,000 Rand. So first question is, will this transaction relate to trust or to business? The answer is business. Now next, will there be a flow of cash? Yes, the question says we physically pay the following to the landlord. So that means my business bank account will decrease. So we'll be on that side and it's a credit. So let's break this up into two separate transactions. So let's first look at the first month's rent of 12,000 Rand exclusive of VAT. Now this is very important. So this is on the 15th of June 2020. How much are we actually going to pay out of our bank? We always pay the inclusive amount. So the amount that's going to go out of my bank will be 12,000 times 1.15. So 13,800 will go out of my business bank account. Now, where are we going to allocate that to? The first leg is our rent. Now is, what do we classify this rent expense account? The answer is, let's ask ourselves the question. When I pay my rent, will I in future get that money back from the landlord? And the answer is no. So rent expense will be an equity account. So how do I calculate the expense portion? I'm saying it's my inclusive amount divided by 1.15, which is 12,000. And then if I add it up together now, you'll see my debits and my credits don't match. The 13,800 there and 12,000 there. So I am short a debit of 1,800, and that is my VAT portion. So on the 15th of June 2020, I'm going to say equals that times 15 divided by 115, and that gives me my VAT portion. So SARS will give me 1,800 Rand back on my VAT, and my actual expense that I lose value by is 1,200 Rand. So my description here will be rent expense, my description there, BCB, description there, BCB. Now let's look at the second leg of that transaction, which is the rental deposit. So also business, and that amount will go out of my bank. So that's also on the 15th. Now, on a deposit, VAT isn't applicable. So the amount that goes out of my bank for the rent deposit is simply 12,000 Rand. Can I allocate that to my rent expense there? And the answer is no, I can't allocate this there because the nature of this is not the same as what that account description says there. So I have to open up a new account for this. And that account I'm going to call rental deposit. Now is what will I classify this? So these classifications are not that important for your assignment. So you don't have to put that in. It's important to be correct, but you don't have to put it in. There's no marks for that. I'm putting it in so that you guys understand what we're trying to accomplish here. So the rental deposit, when I pay that to my landlord, will they in future pay it back to me? And the answer is yes, they will. So a rental deposit will be an asset. So on the 15th of June over there, comes from my business bank, 12,000 Rand. And where did I allocate this to? Allocated this to rental deposit. Okay, so now you know the principles of the business accounting. So in this case, you can apply these principles on how to allocate expenses, and you can use your own judgment as to which account you are going to open on the side here to give the reader of your financial statements indication of what has in fact happened in your business. Okay, then let's move on to our first matter type transaction. So here we've got a litigation matter, and we'll call it LIT 11. So it says on the 3rd of June, you raise a first consultation fee of 1,500 Rand excluding VAT. So let's first ask ourselves, does this relate to trust or business? And the answer is this relates to business. Fees are always raised on the business side. You can never raise a fee in your trust accounting records. You raise the fees on the business side, and then you do a trust to business transfer to transfer the funds from your trust into your business account. So let's go and raise this fee. So we've said it's got to be in the business accounting records. Now we ask the question, is there a flow of cash? And the answer is at this point, no. It basically says we invoice the client for our first consultation that we've done. There's nothing that says the client pays the money in. So now we have to do a journal transaction. So for a journal, we always have a debit leg, we have a credit leg, and in the middle, I normally go like this because there we've got to have the VAT. But at this point, it's a bit tricky. We'll figure out which one, whether it's a debit or a credit. Okay, now if I merely ask you now to complete this journal for me, this will be very difficult to do in your head to tell me exactly which accounts to debit and which accounts to credit. So when I lecture this course, I basically tell the students to use a cheat because it's much easier to figure out what to debit and what to credit using these T accounts. So the way that I teach them to do it is first go and write the transactions into the T accounts, and then from there, come back and do the journal entry and explain what you've done in your T accounts. So let's ask ourselves the question, will I in future receive value because of this transaction? And the answer is yes. That client will pay that money into my bank. So that means that I've generated an asset. So what will I call that asset? And the answer is client LIT 11 business. It's very important to put business there, because when you guys do the assignments, you don't submit Excel sheets where we can see what is in trust and what is in business. Your business and your trustee accounts will be mixed up. But if you don't specifically use the word business, then we don't know which one you are referring to and you can't get your marks. Okay, so this client we now know is going to owe me money in future. So that means I have an asset that increased. So I'm going to have a transaction on the debit side. Now the question is, what does the client owe me? Does he owe me only the 1,500 Rand for the first consultation fee? Or does he owe me that 1,500 Rand inclusive of, or do I add the VAT on top of that? The answer is he has to pay you that amount plus the VAT. So he's got to pay you 1,725 Rand. Just check the date on that transaction was the 3rd of June. Right. Now, we won't put the contra accounts in yet because we don't know what they are. So I've got a debit of 1,725 Rand. Okay, now I know that I've got to open up another T account, and that T account has to have a transaction on the credit side. Amount in there. If I generate this first consultation fee, what's the two things that happen the moment I do that invoice? One is the client owes me the money. And the second thing is I have generated fees. I've done the work. So the account, the moment you do work, we call that account professional fees. Okay. What type of account will professional fees be? The answer is when this client settles his 1,725, will I have to pay it back to him in future? The answer is no, I don't. So that means I can keep the money and I have generated equity. Now, can I simply go and put 1,725 there as professional fees? The answer is no. I haven't generated equity of 1,725 because 225 Rand of that must go to SARS for the VAT. So my fee income that I've generated equals that divided by 1.15. So that is 1,500 Rand, which my equity increases by. Now, is my journal in balance? And the answer is no. I've got debits of 1,225 and credits of 1,500. So I'm short 225. And that, I said, must go to the VAT control account. So on the 3rd of June 2020, I'm going to have, let's just, for the sake of completeness, say that amount times 15 divided by 115, and there I've now got a VAT liability. So at this point, if I stop my business now, my debits are larger than my credits. They exceed my credits. So SARS will have to pay money back to me. But let's see as we go along, as there's more fees. Now I need to enter descriptions on this. So where did this go? This transaction went to professional fees. Portion went to VAT as well. And in this account, what did we have? We had client LIT1 and just put a B there so that I know that is for business. And what is my description in the VAT control? Same there. So do you see? So my description there on my credit legs must be the name of my account where the debit is. My description in the debit leg is the name of where the two credit transactions have gone to. Okay, so that's how we raise a fee. Now, on 15 June 2020, the client settles his account into our trust bank. So now for the first time, if I ask you the question, is this transaction trust or business? You are going to answer trust. Is there a flow of cash for this? Oh, sorry, I actually forgot a step now because we've got to go back and do the journal entry. Now, in the assignment, there's no marks allocated to the journal entries. So if you do only this step, that's fine. You will get your marks. But for completeness sake of the ledger, I'm going to go back and do the journal entries. So now to do the journal entry is very simple. What did I debit? I debited client LIT1 business with 1725. What did I credit? I credited professional fees with 1,500. So I know my balance is 225, and that goes to the VAT control. And now I can see which one must I delete out here. My debit is 1725, so to cancel that, this has to be a credit. So those two credits must equal my debit amount up there. Okay, so this is how we do a journal. And then lastly, you've got to put a description of the journal. So then we can just say fee raised for first consultation. So if you run your business accounts in Excel, this is compulsory to do. And for the assignment, it is not compulsory. But I'm still going to put it in for completeness sake. Right. Okay, now getting back to this transaction. So on the 15th of June, the client paid it into my trust. So is there now a flow of cash? Yes or no? The answer is yes. So my trust cash book is an asset. Because it's an asset, it will increase on the debit side. So there will be an amount of 1725 that comes in on the debit side. That transaction was on the 15th of June, and we don't know. We'll enter the description now. So if that's a debit, I know I'm going to have an account here with the credit of that same amount on the same date. What do we call this account? This account is going to be called client LIT11 trust. It's very important to write business there and trust on this account here. Okay, so now it's easy to enter the descriptions. What's my contra account? It's client LIT11, and there it is my trust cash book. Okay, so that transaction is fairly simple. Now on the 20th of June, you do a trust to business transfer for the available amount. Okay, so this is probably one of the hardest transactions to do. So I'm going to do this slowly with you guys. So on a trust to business transfer, there's two steps. There's the cash step and the value step. So let's first do the cash step. This cash step is the easier step. Will my trust cash book increase or decrease on a trust to business transfer? The answer is it will decrease. So it means I'm going to credit my trust cash book by that amount there. My date was the 20th of June 2020. And now a trust to business transfer is the only transaction in the world that can have one leg on the credit page and its other leg on the, because I pay it from my trust. Think about it. If you go into your internet banking, if you pay from your trust account into your business account, then you will pay, then the amount will be a debit in your business account. So that is on the 20th of June 2020. And what is my description? There it came from the TCB, and in this one it came from the BCB. All right. Now there's still a problem here, because now I've taken the money into my business account, but it still shows that my client owes me money. And in the trust side, it still shows that this client has money in my trust account, which is not true because my trust account balance is now 0. So I need to do a transaction where I clean this against that. So my credit leg falls in this side and my debit leg falls in the trust section. So in this case, we need to do a transfer journal for that. Now, transfer journal is always shown in my trust sheet. So I'm going to debit something and I'm going to credit something, and I'm going to say trust to business transfer matter LIT11. Right. So how do I get this 1725 away from there? The answer is I've got to write a debit transaction on the other side of that T account. So now I can already complete my transaction here, because I know I'm going to debit client LIT11 trust. And what am I going to credit? Client LIT11 1725. So on the 20th of June 2020, and my description is client LIT11 business. Then I go to business, and I'm going to say on the 20th of June 2020. My description of my contract account is client LIT11 trust and 1725. See, now it makes sense, because now the client has paid the money into my trust bank account and I've transferred it to business. So my records are now reflecting that he's got no money in my trust cash book. And then if I go to my business column, the money is now in my business. So the client's paid and I've received it in my business bank, and accordingly, the client does not owe me any monies anymore. Okay, so that one you might want to rewind the video and do once or twice, and just make sure you are confident on how to do a trust to business transfer, because there's quite a bit of them coming along. Okay, now we've got another matter, which is a correspondent matter. So this one is quite important for our assignment. So on the 4th of June 2020, you receive instruction from lead attorneys to recover debt of 400,000 from Totik Pty Limited. Okay, so lead attorneys are the instructing attorneys, and we are the attorneys that are going to do the work. Your agreement with lead attorneys is a 70-30 fee share, and we get 10% collection commission of whatever we can recover, and there's no cap on that. In real life, there's a cap of 10% up to the value of 1,000 Rand. Okay, in real life also, normally these fee shares are a third, But in the assignment, they specifically say a 30% fee share. So don't just divide the amounts by 3. Then you're going to come out on the wrong amount. So make sure that you times by 30% to give them their allowance. So let's just read through this again and determine, is there actually a transaction in this first point? On the 4th of June, we receive an instruction to recover that debt. So there's no transaction there. And this just explains what the fee share is. So nothing to do there. So now, on the 6th of June, you write a letter of demand and you charge 5,000 Rand for that exclusive of VAT. So for that, we need to go and generate a fee. So where do we always generate fees? The answer is always in business. Now, is there a flow of cash for this fee? And the answer is no, not yet. We've only done the work. The client hasn't yet paid us for that. So that means we are going to have a journal. So we're going to have a debit or a credit for the VAT, a credit. Okay, but let's do the easy way and we'll come and do the journal afterwards. So the moment I do work for a client, will I receive value from them in future? And the answer is yes. In other words, I have generated an asset. So I'm going to open up client LIT, and this is matter COR11, business and asset. How much am I going to debit him by? 5,000 Rand, or do I need to include the VAT on top of that? The answer is yes, we must put VAT on top of that. So I'm going to debit them by 5,000 Rand times 1.15. That transaction was on the 6th of June 2020. And where do I contra that? Where does the difference go? Or what is the credit leg? Credit leg is professional fees. Now in this case, I don't have to go and open up a separate professional fees account for each client. So I can just go on below there and say on the 6th of the 6th, 2020. And how much is the fee? The fee is my inclusive amount divided by 1.15. And now my journal is not in balance because I've got 5750 there and 5,000 there. So I need to go and do a credit of 750, or I'm short of a credit, and that is my VAT portion. So over there, 6/6/2020, client COR11 business, 750 Rand. Right, and there my description will again be the same. It's exactly the same. It's a copy and paste of that first fee that we did. But in this case, it's going to be client COR11 business. Right. And now I can go and write my journal in here. So what did we debit? We debited client COR11 business with 5750. We credited professional fees with 5,000, and we credited our VAT because we have to pay that over to SARS with 750. Right, so that was relatively simple, except for one fact that we are completely missing, and that is the fact that there is a fee share agreement on this. So what is my fee that this client owes me? So remember, this client here, I'll put this in brackets as well. The client for this matter is called lead attorneys. So let's call it lead attorneys COR11, because remember, I'm doing the work for lead attorneys. So I'm invoicing lead attorneys, but lead attorneys don't have to pay me this full fee because they can keep 30% of that. So how am I going to, in their account, reflect the discount of 30%? And the answer is we write a credit where we say that times 0.3 times by 0.3 is 30%. So they only have to pay me that amount less this amount. So if that's my credit, what do I now debit? Now let's think about this. My professional fees at this point say that I'm increasing my value by 5,000 Rand. Is that correct? That's not correct because I have to give this discount to them. So I haven't increased my value by the full 5,000 Rand. So if this is the credit, I now need to enter a transaction there for the ex-VAT amount there, the agent's allowance. That will happen on the same day. And to balance out my journal, I'm short of 225 Rand on the debit side, and that will go there. See, so I declare VAT on the full amount, but then I get discount on the VAT also for that discount portion. Right. So again, what was the description on that? Or what was the contra entry? The contra entry is exactly the same. It's professional fees. And what's the contra entry here? My client. And there. So do you see my contra entry is exactly the same as that? We basically just throw this whole transaction in reverse to the value of 30% of the transaction. Okay. So to complete my journal, I now basically have to show this reversal side as well. So we can do that by simply going and doing my first journal in total reverse. So I'm going to copy that, paste it there, and that times 30% times 30% times 30%. See, so that's fine because this is all one transaction. It's fine to do the whole thing in one journal. And then I can say letter of demand raised less 30% agent allowance. Okay, so now that transaction has completely been accounted for. Then they say on the 8th of June, we pay the sheriff 3,000 Rand from our business account, and that is relating to this matter here. So it says business. So we go to our business accounting records. It also says we physically pay the sheriff. So that means our bank account has already decreased by this 3,000 Rand that we need to pay to the sheriff. Let's just check the date. The date is the 8th of June 2020. Okay, now the question is, what do I debit? Now, if this was my expense, then I would open up a ledger for the sheriff and I would expense the sheriff as a business expense. But in this case, and in practice, that sheriff's account is not actually for me. I need to bill that onto my client. So my client will owe me for having to pay the sheriff this 3,000 Rand. So if that's the credit, then I debit my client there with 3,000 Rand to show that you, lead attorneys, owe me as the corresponding attorney for paying this 3,000 Rand on your behalf. So description wise, very easy. BCB, and there say attorneys 011 and business. Now What about the agent's allowance on that? Do we give agents allowance on disbursements? And the answer is no, because I paid the full 3,000 Rand. It's not for my service that I rendered, so I'm not going to give these attorneys discount of 30% on that 3,000 Rand. I paid the full amount, so they will owe me the full amount. Okay, then let's get back to our data. On the 10th of June, Toti Pty Limited pays the capital amount into your trust bank account. Now I said they remember collection commission. Okay, so this remember collection commission won't be in the assignment, so you guys need to remember that yourself. So on the 10th of June, we recover the full 400,000. So where will they pay that? Into my trust or my business bank account? And the answer there is definitely trust. I can never on collection matters receive the collection money in my business. So will my trust bank account increase or decrease? The answer is it will increase. There's now 400,000 Rand more that came into my trust account. That was on the 10th of June. And we'll leave the description for now. Where am I going to allocate that? Now the answer is, do I allocate or do I open up a ledger for Toti Pty Limited? And the answer is no, they are not my client. The moment I receive these funds in trust, I receive this on behalf of my client. So who's my client? Is lead attorneys. My matter reference is COR11, and this is now their trust ledger. So if it's a debit there, it's a credit on this side. And what is my description? My description is the name of the contra account, so TCB, and in this case, lead attorneys COR11. Okay, so that's how we account for the money that has now come in. Now we need to not forget about the collection commission. So collection commission will be a fee. Where do we write that fee? Fee is always done in business. So we have to go to our business accounting records. Now ask ourselves, is there a flow of cash for this? The answer is, remember, this is now for the collection commission itself. Answer is no, it just becomes due to us. So we know we have to do a journal, so there will be a debit. We'll figure out on the VAT if it's a debit or a credit, and we'll credit something. But let's use the hack and first go and do it on this side, and we'll come back and fill in the journal. So in terms of lead attorneys, will they owe me more money because of this collection commission or less? The answer is more. So I need to debit their account with the collection commission. Collection commission is 400,000 times 0.1. So in other words, that's 40,000 Rand. But hold on for a sec. That is the exclusive amount, because that is my commission. So we have to invoice them for VAT on top of that. So we're going to add to our formula times 1.15. We invoice them for the VAT inclusive amount on that collection commission. That was on the 10th of June 2020. We'll enter the description now. So what is the nature of that? Why do I get that? I get this collection commission for services that are rendered. So if you now go and put this collection commission there under professional fees, you'll get your mark. If you open up another T account called collection commission and you also map it as an equity account and you enter the 40,000 in that T account, that will also be correct. That's fine. In this case, I'm just going to add it there. So I want to keep my admin as little as possible. And now I've got a 46 and a 40. In other words, there's 6,000 Rand that needs to go to my VAT control. That was on the 10th, 10 June 2020. I'm just going to copy and paste that same reference there. That is 6,000 Rand. Now this journal of mine is in balance. But now I need to again take into account that these guys are allowed 30% of whatever my fees are. So on that fee they get 30%. On my disbursement, no. But on this one, yes. So I have to throw this whole journal in reverse to the value of 30%. So I'm just going to say equals that times 0.3. There was that times 0.3. And then my VAT control will also decrease by that amount. So on the 10th of June 2020 equals that times 0.3. Right, so I can literally just go and copy and paste whatever my descriptions were there and whatever my description was there. Right, so to make this easy, I'm going to literally just copy and paste this whole journal. And I'm just going to change these amounts to say that one was 46,000, my VAT control was 6, and my professional fees were 40,000, and this one's doing rest. And then that's not for a letter demand, that is collection commission, less 30% agent's allowance. Okay, so a lot of thinking here, and I think when I mark the assignments, I can clearly see a lot of guys just forget about stuff. So do this very carefully, do this early in the morning when your mind is fresh, and make sure that you remember each and every step. You'll see, even I've lectured this course for the last 7 or 8 years, still tend to forget every now and again, and I have to go back and fix it. So it's just human to do that, but take your time, do this. Make sure you allocate each leg of all transactions, because the problem is the moment you miss one leg, for instance, the VAT, if you forget about the VAT, that will also throw out your control account here. The moment this is out, that will also throw out your final payment that you make to SARS for the receiver of revenue. So for every mistake that you make, you actually lose 3 or 4 marks because of that mistake. So make sure that you do catch each leg of all transactions. Okay, and then lastly, on the 15th of June, you transfer to business and pay the balance to the client. So now we are again asking for a trust to business transfer. But now the trick is we need to first work out how much to do this trust to business transfer for. So I'm quickly going to do a little math exercise here and say, okay, well, you owe me 54,750, but I'm going to allow you 15,525. So you owe me this less that. So you owe me 39,225. So that is the value of my trust to business transfer. Remember, trust to business transfer always happen at the lower of what they owe you in business. You can never transfer more to business than what the client owes you, and what he has in trust. Now in this case, they have 400 in trust, but I can't take the full 400 to myself. I'm limited to what I've feed them in business. So this trust to business transfer will be 39,225. So let's first do the cash step. Will my trust bank account increase or decrease because of this? The answer is my trust bank will decrease by, what was that amount? 39,225. 39,225. Right. And if I pay it out there, it comes in here. In 2020 from my trust cash book. Is my date correct? Yeah, 15 June. So from my trust cash book, I got 39,225. Okay, but now what's the problem? My ledger here still owes that, it still shows that they owe me that money. And in trust, it still shows that they have 400, which is not correct because I transferred a portion of that into business. So now we need to do the value step. So this is my trust to business transfer on matter COR11. My client is COR. And the amount is 39,225 that I transferred. Okay, so I'm going to say on the 15th of June 2020, transferred to lead attorneys COR11 business 39,225, and then I received that in my business account on the 15th of June 2020. And say lead attorneys COR11 and trust, very important. So from trust I received 39,225, and there you can see now that T account is in balance. In other words, the balance on this T account is 0. So the client does not owe me any money anymore. Now, if I go to my data, there's one more step that we need to do here. It says pay the balance to the client. So in other words, I must pay out the remainder of these trust funds to the client. So how much do I have to pay them? Well, let's first start. Will there be a flow of cash for that payment? Yes, definitely. Money will go out of my trust cash book. And oh, I put the wrong description there. It should be BCB because that's where. Okay, so where am I paying? Well, let's first start. How much am I paying out? The answer is I'm paying out 400,000 less what I took to business. So I'm paying out 360,775. And where are we going to allocate that payment to? The answer is we're going to allocate it to this client account here. Because after this client's account must also be on 0. So if he, typing error, 360. So we got 400, we paid out 39, and now we're paying you the balance of 360. So my description there will be lead attorneys COR11 trust, and on this side my description will be TCB. And now this account balance is 0, so I'm happy this account is closed, client happy, matter closed. They don't owe me any money in business, nor do I have any of their funds in trust. Okay, so the tricky part there, or the part that that's new, is the part where we have to allocate the collection commission. So we're going to allocate our full fee and then reverse. It's basically like a full reversal of 30% of whatever the total fees are. Okay, then we get to the last matter, and then we are done with this lecture. So this is now a conveyancing matter. So this one here is basically, this will teach you the basics to answer question 1 of the assignment. This here will give you the basics to answer question 2 in the assignment. Now, in the assignment, there's a lot more detail, and I want to say in the assignment, they've made it a bit weird on who pays for what in the conveyancing matter. So we all know in conveyancing, you're supposed to pay what, but in the assignment, they've given a schedule where the buyer pays for stuff that they don't normally do and the seller pays for stuff that they don't normally do. So my example here is on the normal way where everyone pays what they're supposed to. But you please have to read very carefully when you do the assignment as to who is responsible for what payments. I'm saying it's slightly different in my example, but again, my example will teach you all of the principles that you need to apply to be able to answer question 2. Right, so let's go. On the 3rd of June, Mr. Buyer deposits 300,000 Rand into your trust account, and we invest these funds in section 86(4). Okay, so will this deposit be paid into my trust or my business account? The answer is this will be paid into my trust account. Will my trust account increase? Yes. 300,000 Rand. Right. Now, what do I credit? I'm going to credit Mr. Buyer's trust ledger. R300,000. Okay, so my description there will be Mr. Buyer Trust, and my description there will be TCB, contra name of the contra account. Now the second step of that says you invest these funds in section 86(4). Now, for those of you who don't know, section 86(4) account is also a trust account that you open, but the interest on that trust account will go to the client and not to the law society or to the legal practice council. So sometimes when your client pays funds into your trust and you are going to keep the funds there for a long time, then you would want to invest that so that your client gets the interest. So to do that investment, will the money go out of my trust bank account? And the answer is yes. I'll physically go and do an EFT and pay that 300,000 Rand into an investment account. So it will go out of my trust. Now, the question is the following. What do I debit for this? Do I debit my client? Has my liability towards the client changed because of this? And the answer is no. My liability towards the client stays the same, but I now have to open a second cash book, which I'm going to call, this name is very important. You have to say it's in terms of section 86(4), and you have to say on behalf of Mr. Buyer. And we receive the money into my other bank account. So basically all that's happening is I'm moving it from this bank into that bank, and my liability towards the client stays exactly the same. So what is my description? Section 86(4) on behalf of Mr. Buyer. Exact description that I've named this account. And where does that come from? That comes from the TCB. Okay, that's step 1 done. On the 5th of June, the buyer deposits a further 140,000 Rand for costs with a check. So the moment I receive the check, I have to account for that check. I can't wait for it to clear. So on the 5th of June 2020, I'm going to account for the check of 140,000 Rand. Paid that in, Mr. Buyer. So I'm going to credit him from my trust cash book with another 140,000 Rand. And my description there will be exactly the same as that. So I'm just going to copy and paste that, Mr. Buyer's trust ledger. Okay, that's a simple one to do. Now, On the 7th of June, the bank lets you know that the check did not clear. So this check here for the 140,000 Rand cost didn't go through. So what do we do now? Do we keep it like this? Is my accounting records correct? How much or how many rands are we holding on behalf of Mr. Buyer? And the answer is only 300 because this never happened. So I need to throw this in reverse. And also my bank balance will not have a full 140,000 in it because that's not there. So we basically need to take that whole transaction and throw it into reverse. 140,000 on this side. Oh, that was on this 7th. Just get my dates correct. And on the 7th there, 7th June 2020, from my trust cash book, I reversed. If you want to make it easy for the markers, there is nothing wrong in going there and adding a simple description and saying check RTD. Maybe there you can enter deposit. Okay, you can do that if you want, and you can do that for your own purpose as well so that you know what it's for. But there's no marks for that, and there's no marks that will be deducted for that. But as long as you have the 3 letters TCB there, you will get your marks. Okay. Then on the 9th of June, the buyer pays the cost into your trust account via EFT. So now he's going to put the money back in my trust. So that's on the 9th of June. So it's exactly the same as the first transaction. So again, if you want, you can put the check. And we can put the EFT for our own record so that we know what's going on. Okay, so now it came in there. So on the same day, from my trust cash book, 140,000 now back. So I got 140, lost 140, got 140 in again. So now you will have a net of 440 in my trust bank account. Now on the 20th of June, we pay transfer duty of 100,000 Rand. Where will we pay transfer duty from? From the business account? Are we going to fund that transfer duty? No, definitely not. So we're going to pay that from trust. On the 20th of June 2020, pay 100,000 Rand. Okay. Now, a mistake that a lot of people make is they now go and they open up a letter account there that says transfer duty and they allocate 100,000 Rand there. What does that tell me? That now tells me that SARS transfer duty will in future pay me 100,000 Rand because it's an asset, it's an account with a debit balance. That can never be. So think of it this way, you are using Mr. Buyer's money to pay that transfer duty. So that must come out of his deposit that he paid here. So the correct answer is we're going to debit Mr. Buyer's account for the transfer duty. So my description will be TCB and I'm going to put transfer duty. That was 100,000 Rand. And in my business cash book, my description will simply be Mr. Buyer. Okay, then on the 15th of June, occupational rent of 10,000 Rand accrues to the seller and you pay it out to him. So what happens here? This means that Mr. Buyer has now taken occupation of the property and he owes an amount for the occupational rent. So we've got to open up an account for Mr. Seller. Trust. How am I going to reflect this? He paid 140 in for his costs and we've only used 100,000. So now he's telling us, I've still got 40 in your trust. Please pay Mr. Seller from that remaining 40 that I've got. So then what we've got to do is we've got to show that you now have 10,000 Rand less in your trust account and Mr. Seller we're now going to give you a credit of 10,000 Rand, which means in future, we will pay you 10,000 Rand. So we take the money out of Mr. Buyer's account and we allocate it to Mr. Seller's account. Now at this point, what was the date on that? The 15th. So at this point, is there a flow of cash? Have I paid it out to Mr. Seller yet? And the answer is no. I've simply moved it from Mr. Buyer's account to Mr. Seller's account. So I can't go into a cash book transaction, and I can't just do that. I have to do a journal to show that there's a transaction with no flow of cash. So what did I do? I debited Mr. Buyer's account, his trust account, with 10,000 Rand, and I credited Mr. Seller's trust account with 10,000 Rand. And then we'll say, oops, not percentage, Rand. Our description will say occupational rent accrued, something like that. Okay, so what's my description here? Can't be TCB, it's got to be Mr. Seller Trust, because that is the contra account where the transaction was posted to. And in this case, Mr. Buyer Trust. Now there's a second leg that says the 10,000 Rand accrues to the seller and you pay it out to him. So now there's actually a flow of cash. So my cash book balance will decrease by that amount. It's on the 15th, right? Yeah. Okay. Will decrease by 10,000 Rand. And now, where do I put that debit? Mr. Buyer or Mr. Seller? The answer is no. It's got to come off Mr. Seller's account because he now has the 10,000 Rand. Because of that journal, he now has the 10,000 Rand in my trust account. So 10,000 Rand there, and my description is Mr. Seller Trust. And my description here, so TCB. So there we pay the occupational rent to the seller. Okay, then we move on to transaction number 7. Now this one's a mouthful. So we've got to basically just break it up into individual transactions. So on the 28th of June, the property register and the following transactions occur. A guarantee of 1.7 million pays out into the trust. So is there a flow of cash for that? Yes, definitely. So that's on the 28th of June. Who will the guarantee pay out to? The answer is the guarantee will be on behalf of Mr. Buyer. So in Mr. Buyer's account, I'm just going to add some lines here. In Mr. Buyer's account, I'm going to have a TCB transaction to the value of the guarantee that paid out. Now, what also happens at this point? I think I must actually have just inserted this in the question and say purchase price equals or 2 million. So what happens on the day of registration? Now, Mr. Buyer actually owes the money to Mr. Seller. So how am I going to reflect that? Basically in exactly the same way as what we did the occupational rent. So we now say, now you, because remember he still got that 300,000 and the 1.7 million. So now we're going to say, but now Mr. Buyer, you don't have that money in my trust anymore. It's not yours. And Mr. Seller, that money is now due to you. And again, there's no flow of cash for that. So I have to do a journal. So we'll go here, debit, Mr. Buyer Trust, 2 million rand. And we credit Mr. Seller Trust, 2 million rand. And also property registered. Okay, so do you understand? So up to this point, all the money that was held in trust was on behalf of Mr. Buyer, because it's him paying the money in the whole time. But now, the moment the registration goes through, now all of those funds that he has in my trust, which is basically the deposit plus the guarantee, now should go to Mr. Seller, because that is what he must get for the property. Okay, now it says interest of 2,500 rand accrues on the investment and you withdraw. So let's go. That's now in terms of our section 86 investment. So let's first start and say, how are we going to reflect that? Will my bank balance increase or decrease because of the interest? So let's first do the interest transaction. Balance will increase by 2,500 rand. In other words, it's a transaction on the debit side. Now, who gets this interest? And the answer is, well, it was invested on behalf of Mr. Buyer. So Mr. Buyer is going to get the credit for this. But there's a new rule for the last 2 years with the Law Society that says that 5% of all interest earned on Section 86 investments must now go to the LPC. Okay, so I can't allocate this full 2,500 rand to Mr. Buyer. He can only get 2,500 rand times 95%. So he only gets 2,375. But now I've got a problem because now my debits don't match my credits. So I must do something. I'm short a credit. So what I'm going to do is I'm going to say my credit here equals that minus this. And you can also work it out. It should be 5%. And who gets this? The answer is the Legal Practice Council, or you can put Fidelity Fund. They get this 125 rand. Okay, so what was my description here? So I'm going to say Mr. Buyer plus LPC, and in Mr. Buyer's account on the 28th, I'm going to say section 86 for on behalf of Mr. Buyer. And in this one, in my Fidelity Fund, the same description. So this description is the description of where the debit is, and in my debit transaction, I put the description of the two accounts where I'm splitting this to. Okay, now you'll remember in the first lecture I spoke to you guys about the sweeping function on trust accounts with the interest, where the bank will automatically pay out interest due to the LPC or due to the Fidelity Fund to them. And in this case, and in your assignment, you can assume that you have that sweeping function in place. It's basically the norm to have it in place. So that means that this bank account will automatically now go and of that interest pay out 125 rand. Now the question is, how do I account? What's the debit for that? And the debit is this account here to show, because now it shows that you've still got 125 rand in my trust, but the moment the bank sweeps that interest, have that money in my trust account anymore. So we don't owe you anything because you've been paid. My description will say RPC Fidelity Fund account. Okay, and now we have to withdraw the balance of this now we have to withdraw the balance of this investment account. So how much is there now that we can withdraw? The answer is there was 300,000. We got interest of 2,500 and we paid 125 to the LPC. So that's the amount that is being withdrawn. Okay. Okay, so now where are we going to go with this credit? The answer is your trust bank account. Because remember, we've never taken our liability towards the buyer, has never changed. So where does this money now come into? And the answer is into my trust bank account. So my description there will be the same as that description, and my amount will be the same as that amount there. And my description there will say TCB. Right. So for that line there, we've accrued the interest. We've showed that 90%, 95% of the interest goes to Mr. Buyer. 5% of the interest goes to the Fidelity Fund. We pay them their 5%, and the remainder we put back into our trust account. So that transaction has now been completed. Then we say we pay estate agent commission of 80,000 Rand. Now, who's liable for estate agent commission? The answer is the seller. So let's just add some lines to our bank here. So is there a flow of cash for this? Yes, definitely. We're physically going to pay it out. Will my cash book balance increase or decrease? And the answer is it will decrease. So I'm going to have a transaction on that side, and that is 80,000 Rand. Now again, please don't go and open up a T account for estate agent. There is no T account for estate agent. They are not linked to our trust at all. That 80,000 that we are paying out, we are using Mr. Seller's funds to pay that. We're paying it out on his behalf. So we need to show in the seller's trust ledger that we are paying out the estate agent 80,000 Rand. So basically, of the 2 million Rand that he now has in the trust, 80,000 Rand is going to the estate agent. In this case, we're going to say the contra account for that was Mr. Seller. So don't open up an account for the estate agent and this and that. Every payment that gets made is either on behalf of Mr. Buyer or Mr. Seller. You'll see in the assignment, there's quite a few transactions. They pay rates and taxes. They pay this, they pay that. All of those should be allocated to either the buyer or the seller's account. You don't open up for the pest control and the estate agent and this and that. Allocate the payments directly against either the buyer or the seller. Okay, now it says our fee is 30,000 Rand inclusive of that. So what does that mean? That means we have to go and raise a fee. Do we raise fees in trust or business? The answer is fees have to be raised in business, and then we can do a trust to business transfer to the value of that fee. So let's do it the easy way and first use the little T accounts as a hack. So I'm going to copy that one out here. So we are going to call this Mr. Buyer, because he's liable for our fees. Mr. Buyer business, and that is a asset. I'm just keep my formatting the same. Mr. Buyer business, and that is a asset because in future I will receive funds because of this transaction. Now, will Mr. Buyer owe me more or less? Is it a debit or a credit in his account? He's an asset, so he owes me 30,000 Rand. Do I now have to go times 1.15? And the answer is no, I don't, because the question says that is the inclusive amount. So if that's my inclusive amount, that's the debit. So I know I need to go and credit professional fees. There. I'm going to say Mr. Buyer business. That divide by 1.15 because my fee is the X VAT portion. And where does the balance go? The balance goes to SARS. So I'm going to there, Mr. Buyer business. I'm going to say that equals that times 15 divided by 115. And then I'm just going to check if I take my VAT plus my fee, yes, that gives me 30,000 Rand. So at this point, my description is going to be professional fees plus VAT. So at this point, I'm in balance and it's showing that Mr. Buyer owes me that money there. So now the second step here says, well, the last instruction there says transfer to business and pay out buyer and seller. So our fee is 30,000 Rand. So now let's go and do a trust to business transfer. So on the 28th of June, my trust bank will decrease. And my description will be BCB to the value of 30,000 Rand. If it goes out of my trust, comes into my business, now I've got a problem because it's still showing that the buyer owes me money. So I need to do my transfer journal. So I'm going to use that one there and copy it out here. So we are going to debit client Mr. Buyer trust, and we are going to credit client Mr. Buyer business to the value of 30,000 Rand. Right. Okay, so now we must go and actually do this. So we say you now don't have that amount in trust anymore because we are taking 30,000 Rand to Mr. Buyer's business account. And on the business side, we are saying that we are taking this and setting this off against Mr. Buyer's trust ledger. Now it shows that you've got you don't owe us any money. We've taken our fees. Okay. So, and then the last step says pay out the buyer and the seller. So let's first see, is there something to pay out to the buyer? Let's just add this column there. Let's add this one. And let's check what's the difference between the two. The difference is 2375. So what is that? That is his interest that he earned. So I need to pay this interest out to him so that that side and this side is the same. So if I pay interest out, if I want to pay interest out, will that increase or decrease my trust bank? And the answer is that will decrease my trust bank 2375, and I'm paying that to Mr. Buyer. And in Mr. Buyer's account, I'm going to come and go there, TCB 2375. So if I now check my debit side, and my credit side match each other. So that account is now down to 0. And now lastly, we've got to do the same for Mr. Seller. So work out the difference between the two columns. So you've got that in my trust, but I've paid out that on your behalf, 1920. So if I go to my bank, that will also decrease my bank balance. This is to Mr. Seller Trust. 1920. And we'll allocate it here. ECB client and 1920. And that completes the conveyancing transaction. Now my debits match my credits and that one. So your conveyancing transactions have to add back to 0 at the end, otherwise you've done something wrong. Right, and then the very last step. On 30 June, we settle our SARS account. So let's go and check on our VAT control. How much do we owe SARS? So our credit, maybe we don't even, maybe we get some money back. So we owe them on the credit side 10,800 and they owe us 7,738. So no, we've got to pay in. So 10,000 less that, 3,150. So that means I've got to physically go and pay that to SARS. So on the 30th of June 2020, I'm writing it on the credit side of my cash book because my cash book balance will decrease, 3,150 and 3,150. There my SARS VAT account is also 0. Okay, so this might seem like a lot and it might seem like a bit of rocket science at this stage, but if I was you, I would go through the assignment on question 1 and 2 and see the transactions there and then pick up from my data how I've accounted for the transactions or which transactions in my data is similar to the one in the assignment. And then take it line by line, see how I answered it, what I used as the debits and credits, and then just use the names and the numbers from the assignment. But this is very close to what your assignment would be. There's just a bit more detail in there and a lot more transactions, but all of the principles have been dealt with in this lecture. Okay, so then we're going to go back here, say stop sharing. Right, so as I said, this is the most important part. About 80% of your exam is in this lecture. So if you need to watch this 2 or 3 times to get it sorted out, please do. Okay, and then we'll chat to you guys in terms of when the next lectures will be uploaded so that you can go on with the rest of the assignment. Have a good day or evening or morning or whatever time you are watching this. Cheers.